Hello and welcome to Moneycontrol. I have with me Rohit Srivastava, founder of Indiacharts and web.strike money. Rohit, thank you for joining me. Markets are giving signals of, some kind of correction in the shorter term, in a week's view. What is your advice to traders and how should you go about positioning?
Yeah, so I think this sell-off, especially with news today. So when you get a news-based panic, you do get a short-term oversold setup. I think that has sort of happened. Whether we look at the momentum swing, which is on strike, or if you look at the hourly RSI, which would have gone closer to 20, that tells you that it's time for a rebound of some kind. But that rebound might only be a retracement of the fall. Okay, you can do a 38% retracement, you can do a 50% retracement of the entire 5-6 day fall that we have seen. But subsequent to that, I do sense that the markets will fall again. And so therefore, this might just be a short-term period where, you get a bounce. Now, people who are adept with 1 to 2 day trading would only go on the long side here. Otherwise, typically, we would wait for the bounce and look at selling opportunities on the higher side.
So you're saying it will be kind of like a dead cat bounce?
Yes, I do think it will be a dead cat bounce.
So your advice would be to
sell on the rise.
Sell on the rise. Okay. And in this, where is the relative strength? Which segments are you seeing relative strength in, and which could be on the shorter side where you can, kind of place the short bets?
So my sense is that because although it's been the weakest sector, I think IT somewhere is fallen a lot and will get oversold. So in the next decline, it's possible that IT holds out a bit. But I would look for weakness in financials, autos. Those would be two areas where I think the trades may show up on the short side.
Okay. And on the long side?
Completely avoiding the long side right now.
Okay.
Because till when you actually have a downtrend of this nature, it's very rare to see stocks continue to make new highs. We are still seeing that because from Jan to now, it's been a rotation market. It's been a topping process. Once the top gets set in place, then you suddenly find that nothing works. And so that's a risk we don't really want to take. So we are really avoiding being on the long side right now.
And May was predicted to be upside, one side aggressive long. Wow, what is it signaling now? Kind of.
Yeah. So
and what index numbers are you kind of targeting?
So now I'm no more looking for new highs in the market. I think what has ended up happening is because everybody was anticipating a BJP win, and that the number is going to be so strong, it's sort of gotten discounted between December when they thought that, yeah, this is done and dusted, they are going to win. And now we are talking in April. It's been 4 months of consistent buying on the same idea that they are coming, they're coming, they're coming. So by the time you actually get the news, so there's this old saying in the markets, buy in expectation, sell on news. So the news actually ends up being the top for the market rather than the starting point of a move. So I think we are late into the rally. We've significantly discounted the election. It's possible that once the news comes in, you actually have profit booking.
So you're seeing more downside?
I'm seeing more downside eventually. There could be a pop around the election news because, when you get that win, that day possibly the markets would, run up. But I don't think the upside is, there may be very limited upside. That's the
So
thought.
For traders that are placing bets, what strategies are actually working? Option sellers are kind of finding it difficult to make money in these markets. There are spikes and all. So what strategy would you suggest to go with?
So I tend to be directional. So which means that it doesn't matter to me whether I buy options, sell options, as long as I'm on the right side, right? So if it's bearish and I'm selling calls, I would still make money. The option buyer or seller gets stuck, especially when he is doing complex strategies and there's a lot of volatility, right, on both sides. So if he's sold certain amount of calls and certain amount of puts and the market moves in a particular direction and he's not able to unwind that fast enough, a loss shows up. So that is the risk to writers. If you have big gap downs or gap ups, that's something which has not happened in years. So sort of nobody is perceiving that risk at this moment. But I tend to prefer being on the long side of options rather than on the sell side because the premium is defined and your risk can be managed. Whereas if you're a seller, your upside or downside is unlimited if you're wrong. So that's my thinking. But of course, people do selling of options. And if you're directionally right or if market volatility is limited, then the writer also tends to make money.
So on the long side, how do you kind of hedge it? But are you just directional?
No, so hedging can happen in two ways. One is that you can think, okay, should I do a spread? Okay. Or the other way is you take a position which is limited to that extent that you want to risk. right? So the reason you hedge is because you want to reduce risk. But the problem with hedging, if you're the buyer of an option, is that you actually limit the upside that you might have if the trade becomes a winning trade. So if the premium can double and then instead of that you ended up selling call options, then you will not make the same amount of money. So it's more important to be right on the market, than to really hedge, especially if you're doing a long option trade.
Correct. But I have a point, like, since there is, last night we were thinking there's some kind of bounce, some kind of upside, but last night there was the Israel attacking. So in this kind of markets, should one just do intraday trades or like take a weekly position? Because that's where, with one side aggressive move, but with the geopolitical uncertainty, how should, one place their bets?
So this is where it takes you one step higher in terms of understanding how you trade. I would not say go intraday, because intraday by its own nature is not something you can only do for one day. It's like a lifelong strategy. So it can't be only based on, oh, today I have geopolitics, let's do intraday. And tomorrow when it goes away, let's not do intraday.